Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. Today is Sunday, May 21st, and this is your weekly video. Okay, we're going to pick up where we left off here last week. This is the forecast that we updated last week. I'm going to give myself an incomplete for this one. The whole premise last week is that we would be entering a pivot window. This pivot window, as drawn, extends into next week, extends into Tuesday. We certainly saw a huge move up on Wednesday, Thursday, a little bit of consolidation Friday. Certainly that was not in the forecast, but that still does not invalidate the pivot window thesis. Okay, so the pivot window thesis is still intact. And I'm going to reserve judgment on this forecast until next week's video. Basically, if we can see a close below this big Thursday candle, then I'll give myself an A, and I will conclude that the pivot was in or is in. So that's really what I'm looking for here, is a close below 13,600-ish on the NQ, and then that would confirm this pivot. Okay, so obviously huge week last week with options expiration and a big move up. Now, the basis of the forecast was grounded on a couple of techniques from Jenkins that are all based on this notion of time price equivalence. And that's what all these circles are here. They're basically vectors of the same radius, price, and time. And what we see here is that one of these circles ended on Wednesday and we got a big push up, right? So we saw a very big reaction at the completion of this radius here. Now we've got a second bigger circle, and you can see that this one is centered on, let me just click on it so we can see where the center is. It's centered on April 4th, and the circumference is on March 13th. And that completes on Tuesday, well, sometime between Monday and Tuesday. Anyways, let's say it completes on Tuesday. That is why this pivot window, this green box here, ends on Tuesday. So we're going to continue with that thesis for now, and I'm going to show you another technique that also aligns with this, that's also from Jenkins, that's also built on the concept of time price equivalence. Okay, so let's take a look first at some of the technical reasons, though, but why I'm I guess, discounting this rally, and I don't see this rally last week as the start of a major move up. Okay, so why am I taking that stance? Well, we can see here that we've got this lovely diagonal formation, and it concluded with a surge up over the upper line and then some consolidation. But we can also take a look at the breadth. And that's really the point of this chart, is to see that the breadth remains really uninspiring, right? If we go back to the end of 2022, early 2023, we can see the kickoff to the January rally had some very strong breadth. Every single rally since then has had weaker breadth, including this huge pump last week. Very weak breadth. This is really on the back of just a handful of stocks that are pushing things up. These are not the conditions that you see at the start of a new bull market. What you tend to see is something like this, where there's much broader participation, or if you want to go all the way back to 2009, at the end of the financial crisis, this is the kind of breadth pattern that you'll want to see. You'll want to see the McClellan summation index make a higher low, and you want to see a sharp kickoff in stocks in breadth measured by the McClellan oscillator here. So we saw a little bit of that in January, but we haven't seen that since, and since then breadth has been weakening. Okay, so that's reason number one why I'm looking at this as at least a temporary top. Okay. The second reason is bonds. If we go over here and take a look at the 10-year notes, they really broke down last week below support that is held in April and in March. And it looks like we're on our way to challenging some of these early March lows again, down around 110 on bonds. And if we take a look at yields, TNX, I believe, yes, that's the 10-year note yield. We're at 3.69, heading up to what I think we're going to be challenging up here at 4.07. So this is not supportive of a further move up either. Okay. So let's go and take a look at this other Jenkins technique that I've come across, and I'll drop a link in the description to his books here. So this is a technique described in his Secret Science for the Stock Market book. And here's a plain chart of the Qs, and we're going to start. I've drawn all these things out. So I'm just going to start by simply unhiding the objects that I've drawn. All right, so the first thing I want to start with is this, what is really this first kickoff to the broader move that we've been in. And so this is, you can see this as a triangle starting December 28th and concluding February 2nd. So that's really the first move here. Now, based on the principle of time price equivalence, we can do some interesting and basic geometry using this. So time price equivalence says that a unit of time is the same as a unit of price. So after we draw our triangle, of course, we can apply some Pythagoras, and we want to figure out the length of this side of the hypotenuse. So first we measure the base, which is 36 calendar days. We use calendar days here, not trading days. And then we measure the price range, which comes out to 54, and a little bit of basic math, and we get the hypotenuse at 65. Okay, so now let's measure 65 calendar days out here. All right, so we've got 65 calendar days moving out, and then we can start to apply some Fibonacci time extensions to this. So let's take a look at those Fib time extensions, and now we can see something interesting is that the 2.236 identified Friday as a time extension here as well. So not only do we have a cluster of circles completing, but we also have this 2.236 Fib time extension. And if you're looking at 2.236 and asking yourself, hey, I don't think that's a Fibonacci number, it is the square root of 5. It's also 0.618 plus 1.618. And the phi ratio, the golden ratio, can be derived from 1 plus the square root of 5 divided by 2. So that's an interesting ratio there. I'm just going to bring these up so you can see the ratios here that I'm using. There's some interesting ones here as well, like the square root of 2 and the square root of 3 and pi. So help yourself to these ratios. It's more than just the usual fibs. Okay, so that is this technique as well that is, again, based on this principle of time price equivalence, and it's identifying Friday as an interesting top. And we can see some other interesting moves that have completed or big moves that have started based on some of these Fibonacci time periods. Okay, so that's the Q. So let's go back to our forecast here, and we will update this with the latest information we have. All right, so I guess a third reason why I'm still looking at this as a valid pivot window is we have a Gann wave on Monday, Gann wave yellow. So that is a lunar cycle. And we can see down here that the last Gann wave yellow acted as a low. And typically Gann wave yellows are highs. So when they act as a low, really what can happen is two things. It can either go down and continue down into the blue, which it did not, or it can continue up to the next yellow, which it did. So we basically had like 4 weeks up here since this last Gann wave yellow, which was a low on April 25th. Okay, so it's definitely time for a trip to visit the Gann wave blue here on June 5th. So one of the things I'm going to do is I'm just going to update this target box just to move it up a little bit. I want the target box to be centered on the midpoint between these two magic levels here. And I'm going to shift it over a little bit so that it's centered a little bit around the Gann wave blue. So we'll put it here and we'll put it here. And the other thing that we're seeing is, I'm going to slide this guy over. What we're seeing, and I'll show you this shortly, is there is a cluster of dates between the 5th and 7th on the time trades probabilities. So we're going to be taking advantage of those. The other reason why I think we need a trip down here to continue moving up is the square of 12. These are these two red EMAs. It's the 144 and 103 EMA. And you can see back here that they crossed in April. After a square of 12 cross, often you will find price comes back to challenge that area again. So I'm thinking that the square of 12 is going to move up here into this target box. So right now that's at about 12,800, about 1,000 points lower here on the NQ. So that is the updated forecast that we're going to look at, and I'll give myself a rating next week based on whether or not we're able to successfully close below the low of May 18th here, which is about 13,600. All righty, so that's our new forecast. Let's do a quick tour of what else we've got. I want to take a quick look at Bitcoin. Now, the Bitcoin time trades forecast is a little quiet at the moment. I'm in the middle of a machine learning renovation that will hopefully address some of these issues. So we're not getting much of an edge right now from the time trades forecast, probability forecast. However, if we go over to TradingView, we can take advantage of the Gann fans that we have applied to this squared chart. Again, we use time trades to square the chart, find the optimal aspect ratio between price and time, and then we can do all sorts of interesting stuff with this. Right now, this purple line is pretty important. This is the 4x1 down from, or sorry, 3x1 down from the all-time high. So we are above that now. In general, like in the longer term, this is a bullish configuration. We're starting to take out some of these fans from the all-time high. Sure, we're not surging upwards the way I think a lot of crypto bulls would like us to see, but you know, our basic MACD here, the 2110 MACD that Al Larson uses quite a bit, you know, that's still positive, although it is declining. And we've got a fair bit of support underneath from these Gann fans here. We've got multiple Gann fans below us that continue to provide support. So it just looks like a routine consolidation, to be honest, in Bitcoin. You know, I think the most we could see coming down here is like 23K. If you're a long-term holder, you know, I'm not seeing anything to really get too concerned about in the short term here. So that's really the update on Bitcoin. And next, we're going to take a look at natural gas. Natural gas had a bit of a week, and we can see here how it's broken through these Gann fans coming down from highs, and it's right back up to this magic level at this white magic level at 2.618. Now, one of the things I really like about natural gas is when it's in sync, when it's trending, it tends to respect the Gann waves really well. Again, these are the blue and yellow lines. They're a lunar cycle. So we're starting to see that synchronicity reappear here. We've got lows around blue, we've got highs around yellow, lows around blue, highs around yellow. Wouldn't be surprised to see that continue. So as long as this continues, I think the uptrend is going to stay in place. We regained this important Gann fan here up from 0. So that looks like the 2x1. I can't tell which one that is. Might be the 2x1 up from 0. But regardless, above the fan is good. Below the fans are bad. And we regained a Gann fan, an orange magic level, and almost a white magic level this week. So hopefully, if this trend can continue, we can regain that white magic level this week. So let's go and take a look at what Time Trades is saying about UNG, and we can get an update here on that. So UNG is showing a fair bit of green at the moment based on the latest updated machine learning. There's also a wide range of low probability pivot highs. So what this is telling us is there's a good chance that this trend can continue up here at least until mid-June. All right, so that's looking good on UNG. All right, let's take a quick look at gold, GLD. So gold's having quite a correction at the moment. It looks like this correction is not quite done yet. There's a little bit more red to come in the forecast, and we've got this orange magic level down here at 176 on the GLD ETF. We also have a pivot low forecast for mid-June. So I think if there continues to be more downside potential here on gold, at least until early June, and that may extend into mid-June. Not sure what to make of this over here, this pivot high. This could be a small reaction on the way down to making a more important low, and then we'll reassess here. Again, as always, with these directional forecasts, you need to keep in mind that these moves could invert, right? So whenever we're looking at these moves, they could invert and become moves up instead of moves down. And we'll wrap up the call today with a look at the Nifty NSEI. And the Nifty is consolidating here. It's got a lot of Gann fan support right here based on this fan down from the December 1st high. So even though it had a red week, it's great to see the Gann fan support holding. It does look like, however, this downtrend could continue through to mid-June, given the combination of probabilities of moves down, as well as the probability of a pivot low here. So it looks like there's continued bearish potential on the Nifty, at least for the next 2 to 3 weeks. Okay, so that's it for me. I hope you are having a great weekend. Good luck this week, trade safe, and we'll talk to you again later. Thank you.